All right, what's going on, everybody? Welcome to the Financial Roundtable. Daniel and I are going to be hosting our first ever interview with another financial YouTuber, Bruce Wang. Super excited to have him on. I've been watching him for a while. I'm sure some of you guys have seen his videos. He's a big dividend investor and also real estate investor. And he is actually a passive income beast right now. So to give you guys a little background on him, he's got over 6 figures in stocks, several real estate income properties, over 100,000 subscribers on YouTube. So definitely go check him out. And Bruce, do you want to give yourself a quick introduction?
Hey Matthew, thanks for the sweet intro. That was good. That was good. Yeah, so my name is Bruce Wang. Everything Matthew said is like right on the dot. I think that was perfect.
Perfect. Perfect. We're just going to be talking about, how Bruce got to where he is now, how much he's making completely in passive income from stocks, real estate, and YouTube, how he got started in real estate and stocks. And of course, the big question, stock market investing or real estate investing, which one's better from his experience? We have like different sections broken up for this podcast slash video right here. We're going to be talking about investing, and then YouTube, then real estate. But I think a good like overarching question would be, how much do you earn in passive income every month if you combine all of your income streams like dividend, stocks, real estate, and YouTube? Would you say?
So I don't really count, like when it comes to my dividend portfolio, I'm thinking right now I roughly make just under $400 in dividends a month on average.
Nice.
And when it comes to my real estate, that's 10,000 a month, but that's
Wow.
not including like that's
From
not
two properties, right? Or three?
three. I have two duplexes in my town, and I have one condo in New York.
Okay.
Oh, nice.
That one is like managed by like a property manager. That one, the property manager takes a lot of money from that one. So
Okay.
that's 10,000 is like cash flow.
Wow.
Wow.
Yeah.
So that property manager, is that rental property then more just like an equity build, not so much a cash flow one?
That one is just for all my properties are paid off.
Oh, wow.
Yeah.
Wow.
So
10,000 from real estate, about 400 a month from dividends.
yeah.
And then are you willing to share like YouTube, those kind of stats?
On YouTube, yeah, I can share my YouTube. So roughly, I'm making on average like 5,000 from AdSense, and on the affiliate side, I'm making roughly another 5,000 on
Wow.
average.
Oh, okay. And is affiliates like different brokerages, or do you have like books, or what's that affiliate business look like?
That's like everything, but mostly it's from a lot of brokerages, affiliates as well. Like
Okay.
that's the majority of it. Yeah.
Yeah. Yeah. Because they're all giving out like these free stocks now. And it's actually pretty crazy just how much they're paying out in these free stocks. I have no idea where they're coming from.
Yeah, same.
I think for the brokerages, it makes sense for them because like the long-term value of having one of the customers stay with them is just they make so much more money on top. So like they just entice you with the free stock, and then they keep you in the brokerage, and they just keep accumulating the fees on them. So I
Yeah.
think that's where they get most of their money from.
So what would you consider your beginnings? What experiences kind of got you to where you are today? Because obviously this all didn't happen overnight. There's probably many, many years of work. So could you kind of give us like a little background about yourself and where you started, what changed, and the kind of steps and decisions you made to get to where you are now?
Yeah, I can do that. So I'm 30. I'm almost 33. I'm be turning 33 in a few months.
Mhm.
So I think I'm a little bit older than you guys. I think maybe.
Yeah. Yeah. Yeah.
So
you are.
so
Still
I've been
young,
in the
though.
workforce. I've been in the workforce for over 10 years, doing a lot of different jobs. I was in a family business for a few years. I moved to Cambodia to do some work in Cambodia for a few years, and then so throughout that time, I was a big saver. I was like, all right, I always wanted to go into real estate. So in the back of my mind, I was always saving for like to buy rental properties. Like I knew that was what I wanted to do. And when I left Cambodia, like that was like the biggest change in my life. And when I lived in Cambodia, because like it's a third world country, it's beautiful, but there's a lot of poverty.
Mhm.
And that just made me think like, wow, like I'm so lucky to be American. I'm so lucky to, have all these opportunities. And I was like, I got to make something of myself. I can't just, waste this life.
Mm.
If that makes any sense.
Yeah. definitely. So real estate was always kind of in the back of your mind, like that
Yeah.
was always your end goal, and then investing was something you kind of picked up along the way.
Yep. So I only started investing in the stock market within the last 3 years.
Oh,
Okay.
wow.
So like, I think I started at the end of 2018, around there.
Okay. So right around when that, would you say right after that kind of fourth quarter drop off in 2018, where the market kind of corrected a little bit, that was when you got in?
Before that though, I was investing in crypto.
Yeah, I saw
Oh,
that.
Yeah, so that was like my big thing. I was like, oh man, crypto's a new thing. I want to get in a little bit. And I kind of rode it all the way until the peak, and then it crashed. And I was like, this is the worst feeling in the world, man. Losing so much money in the crypto market.
Oh man. What about like overall, were you red after it all was said and done? Or
I would say I was broke even. I invested around that time a total of 40,000.
Okay.
oh, that's
Yeah.
yeah.
So like, yeah, at the peak of my portfolio's value, it was like probably in the $200,000 range. But then after everything came crashing back down, I was like, you know.
So what got you into Bitcoin at the time? Like, was it just something that you'd heard about and then put some, like $40,000, not just like pocket change, you know, that's you, I figure you had some serious
Yeah.
research to back that up.
So around mid 2017, I was like, all right, I already had one rental property at the time, and I was like, all right, maybe I should diversify a bit, do something a bit more speculative. You know, the returns might be a bit crazier, and that's why when I started investing in crypto, and I was like, oh man, I can see a future in cryptocurrencies. I can see a future in, moving away from fiat and stuff like that.
Mhm.
But I feel like at that time, I was still a beginner in investing in general outside of real estate. So I was like, I feel like maybe I went in too naive.
Mm.
You know what I'm saying?
Yeah.
Oh, yeah, for sure.
So I definitely got burned like a lot of other people.
Mhm.
Yeah, I have a similar story. When I started investing, I invested into the cannabis bubble in 2018.
Oh,
I got burned too, man.
Yeah. Well, I mean, it's only, I mean, whenever I, take a loss, I personally haven't experienced like a big crash in an asset value, like the cannabis bubble or like Bitcoin. Whenever I, take a loss somewhere, I kind of think like, okay, if I learned a lesson, then that loss is kind of like the price I pay to learn that lesson, almost like going to a seminar or something. Um, but I mean, 200K to back down for it.
Yeah.
That's an expensive lesson.
That is.
So what did you kind of take away from it? Like, did that change the way you were looking at the world in any way?
so I think that is what changed me into like a more conservative investor. And I think
Hmm.
that's why I'm more into dividend stocks than like growth stocks or speculative investments and stuff like that. So definitely that was my lesson. Like, yeah, like you can speculate, but make sure it's like a smaller portion of your portfolio rather than your entire portfolio.
Yeah.
Have you read The Intelligent Investor by any chance?
I have it on Audible, and I just let it play,
Mhm.
but a lot of it went over my head. Is kind of thick to read.
It is. It is. But yeah, the first chapter, what you just said is exactly what the intelligent investor preaches. Like, if you're going to speculate, do it with less than 10% of your portfolio.
Yep.
So
Yeah, that's exactly what I do nowadays.
same.
So before we get into the investing part of this episode, the last question to open up is, obviously you've made a lot of decisions, you've learned a lot, like we just talked about with the Bitcoin and everything. What do you think was like the most important shift in mindset, if there was one, or the way you look at life, or like what perspective do you think helped you grow to what you have now? Because I feel like everyone has different motivations, like you said, coming to America and realizing, wow, this is an incredible opportunity. How much did that play into your motivation, and were there other things that the ways of thinking, like in terms of like maybe saving money or spending? Could you kind of walk us through like how you see life, I guess?
So like I said, I was in Cambodia and I was just working, and I was starting to get into a lot of like self-help books. And then I fell on what's this book? Rich Dad Poor Dad. That was the book
Oh.
that like helped change a lot of my mindset when it comes to personal finance and money. Yeah, that's a great book. Even though it's like a bit too much anecdotal. I think that is that a word?
Yeah,
There's a lot of
anecdotal, yeah.
anecdotal. So it's like, it's a great book for beginners. So yeah, for the one thing I took away from that is like always invest in assets and, you know, stay away from liabilities.
Mhm. Yeah, 100%. And this actually also was like a big mindset shift for me. I agree. Like it used a lot of stories and like examples, but I think that's great because it shows you like this is possible. Like this is what I've
Mm.
done, like what he's done. And it talks about like money as being almost like hiring someone, except money works 24/7 and forever. So that was like also a big shift for me. So yeah, if anyone listening to this hasn't read this book before, I know there's a lot of stuff surrounding like Robert Kiyosaki, like, but this book, I think I can definitely vouch for it. Okay, so let's get into your investing. So we talked about Bitcoin. I was going to ask like why dividends, and it sounds like that was kind of the more conservative approach you said after what happened with Bitcoin. Do you see yourself opening up to more like growth investing or even just value investing? Do you see yourself expanding into those areas when it comes to stocks, or do you think you're going to stick with the passive income approach?
I think a majority of my portfolio right now, I would say it's in a lot of like ETFs.
Mm.
Mhm.
So I kind of want to go towards the ETF route currently, like dividend and also dividends, and then just a small portion of it will be like growth and value companies. So that's how like I kind of want to structure my portfolio going on,
Mhm.
because the thing is like if you own like 30, 40, 50 stocks in your portfolio, there's so much like time and effort that you have to go into each company. You got to make sure like they're doing the right things,
Yeah.
and it's just way too much time commitment for me right now. So that's why I'm starting to shift my mindset towards like, you know what, an index fund is really good too. It's good enough.
Mhm. So would you say that it's kind of like a trade-off? Because you're right, like if you're going to go into these growth stocks, these other stocks, you got to put a lot of research and time into those. So what do you use your time for instead? And I assume you're doing research for like a different asset like real estate, or are you working on like a business or YouTube?
So um, I'm still doing a lot of real estate work myself. I'm looking for properties. I'm a real estate manager myself. Like I take care of a lot of commercial properties. So that takes up like a lot of my time. And now like YouTube is starting to grow a little bit faster than than 2-3 years ago when I started. So YouTube is starting to take up a lot more time as well. And then whatever else I have goes into like looking at different types of companies and stocks like that. But it's only like I only get like a few hours because I'm also a family man. I have,
Mhm.
like I said earlier, I had a kid,
Mhm.
and I always have to spend time with the family.
Yeah, no, that's actually really it's really impressive that you're able to do all of this and still like maintain everything to a very high level. So,
Just
um,
barely, just barely.
and then Daniel was also talking, like we were kind of like looking through your videos, trying to get to know you a little bit more. And Daniel had mentioned like he really liked the way you thought. And so I don't know, Daniel, did you want to talk about that a little bit more?
Yeah, for sure. I was just watching your last video and you were talking about your monthly dividend income from realty income, the stock, and how you get $23 a month and how that pays for your Netflix subscription. I just think that's a great way to think because then that's just another liability that you don't really have to pay for out of your cash flow, so to say.
So I like to try to relate to like whenever I make a video, I try to relate to the person that's watching.
Hmm.
And one of the comments that I always get is, why would I invest like $60 for, 25 cents or something like that in dividends? It's like it seems like a waste of money. But whenever you're investing the money, like you're putting in $60 to buy a company, you're not just like throwing it away. Like that company, that stock has a value, and like putting your money to work, that's all I'm about. Just making my money work for me, and having the dividends come in, like telling them like, oh yeah, this dividend can pay for Netflix. That's just one way to relate to the viewer. That's how I do it. Yeah.
Hmm.
Yeah, it's perfect. I love it. Like my own personal investing goal is to one day have my dividend income pay for all of my living expenses. And I think that's the best way to live a truly financially free life. So just that little bit of getting realty income to pay for your Netflix subscription, it's like that's just the start.
Yeah. And actually, I had a similar way of looking at things. So I thought it was really interesting that you kind of think the same way or along the same lines. Or back on campus, so I'm actually in college right now. And so I would always go to this place for burritos, like for lunch and stuff. And say a burrito's like $10. It's like a little expensive, but like it's like one of the only places for burritos around there. And so now whenever I look at things, I'm like, oh, it's like two burritos. Or like when my friends are like, oh, I don't know if like I want to go do that, but I'm like, dude, you just trade two burritos for this one experience. Like it's so worth it if you just think about it, you know. Or like, oh, I don't know if I want to spend that money. If you just think about it in the terms of burritos, I think it totally changes the way totally changes the way that you look at how to spend your money. Because I would consider myself very frugal, but at the same time, I'm willing to spend a little more on experiences. So I don't know if you guys, Dan, if you guys think about maybe not burritos, but something else. I think it's a really great way to look at things.
Yeah, I used to think in terms of Subway sandwiches.
Oh, no way.
No,
All right, maybe
no.
maybe this is a common thing.
That's what I was eating when I was in college. Subway sandwiches, the $5 footlongs.
Exactly.
Maybe I should switch.
When I was working a job too, when I was making like 20 bucks an hour, if I was, going to a movie or something, I would consider that trading an hour of my life to do that as well. So when you think about it like that too, I found it kind of helped me make decisions on where I want to spend my money and if it's really worth it to spend the money.
100%. So, and then we also are kind of looking through some of your portfolios and stuff, and we noticed ExxonMobil, not more of a contrarian play in today's environment, so we're kind of curious, like what your thesis was on them. And this is more of a specific question. The rest will be kind of more general.
I feel like ExxonMobil, like they're just getting crushed by the EV market, and everybody's just going into EVs right now. That's like getting hyped up a lot, especially on YouTube. Everybody's thinking Tesla is going to take over the world and stuff like that. But I don't know if you guys saw my last video. I was just trying to make sense, like gasoline, fuel, and stuff like that is always going to be used. So I think for the dividends is good. A good dividend play is a good value play as well.
Oh, sorry. Yeah, I would agree. I don't think oil's ever going to fully disappear. And it kind of seems like the market is pricing that it's going to. And I kind of agree with you. I think some of these oil companies are selling for really good values right now, and their dividends are really attractive.
Yep.
So I was kind of creeping your YouTube channel, and I saw that you're a retired crypto investor, and you kind of touched on that earlier, but why are you still invested? Or if you're not, why did you move away from crypto?
So in 2017, like I started investing heavily into crypto. I was even mining Bitcoin.
Yeah.
Like I have like in the back of my office, I have all the ASIC miners, the A7s, the S7s, and I should have kept them running all this years. But yeah, after that crash happened, I was like, maybe this is the right choice. But I held on to mostly everything, luckily.
Oh, so
yeah. So now I'm
you're
up
feeling pretty
again.
good right now.
I'm up again now.
Oh, nice.
After 3 years.
Wow, that was not easy to hold through. I respect that. That's nice.
I mean, once it crashed, I just like threw away like everything. I was just like put it in the back of my mind. And then now that it's coming back, I was like, oh, it's cool.
Yeah.
It's a pretty tame reaction for what's going on, but yeah, it is cool. All right, so now let's talk about YouTube really quick, and then we'll get into real estate. So can you kind of give us a rundown of like the history of your channel, when you started, how long it took you to get here? I know you said you started maybe 2 or 3 years ago, and then like has it already become like a full-time thing? I assume it has. And how did you know when to make that decision to go full-time?
So I don't think it's full-time for me. Like I spend maybe a half a day on YouTube at the moment. It takes me about like 3 hours to make 3 to 4 hours to make a video or something like that. But yeah, I started making YouTube years ago. Like if you saw some of my older videos, they were like random like hoverboard videos. Like one of those went viral. And I think after I started talking about dividends on YouTube, that's when really my channel started to blow up. When I don't know if I started the Robinhood Challenge myself or something like that. Like, but that was one key word that I used again and again and again. And I think that really caught on with the algorithm when it comes to my channel.
Got it. Would you say you're probably like one of the earlier YouTube channels to be covering finance?
Uh, I wouldn't say that because at the time, like I wasn't that as knowledgeable as I am now in
Mhm.
when it comes to the stock market. Like when I started my journey in the stock market, I was coming it from a beginner standpoint. So I think a lot of other beginners liked what I was doing, and they were like, "Oh man, this guy is just starting. Maybe I can just start with him."
Mhm.
I think I was coming from that angle.
I have seen that your dividend videos are some of your most viewed videos, though. So it seems like
Yeah,
that is very much so your niche. It seems
definitely,
like.
definitely. That was the keyword that I wanted to take over.
Seems like it worked.
So what about moving forward? So moving forward for your channel, do you kind of see yourself doing more dividend focused content, maybe expanding into real estate videos, or like, also your merch. Your merch is sick. That the dividends that looks like
Oh
champion.
yeah.
Yeah, that is awesome. But like even beyond merchandise, you see like maybe um launching like a product, or like expanding your YouTube business in some sort of way.
I so this commercial building that I'm in now, like I'm partnered with this. I have a partner for owning this property, and like a few units are empty. And like my ultimate goal is like to create like a network of creators in this commercial building. I think that would be pretty cool. So we'll all be making videos in here and like collabing and helping each other out. I mean, that's one way I want to expand the business. But when it comes to like the merchandise, that's kind of like that's really secondary. It's like if I have a good
Yeah.
idea, like I'll try to make something.
Well, that sounds like a sweet idea to have different YouTubers in the same building and be able to collab so easily like that.
Like I watch. I'm a big YouTuber and like
Mhm.
watching YouTube. I mean, so I see like a lot of these hype houses.
Yeah,
I think
yeah.
that or cloud house. And I'm like, wow, I can't I wouldn't be able to live with like another YouTuber, but definitely collabing with them in a commercial building. Yeah, probably I could do that.
Yeah,
Yeah,
I
for
think
sure.
the collaboration in like the finance space. I mean, Daniel and I are starting this channel. We want to bring more finance channels together, and kind of like work together. And I think Mr. Beast was even starting like a YouTube university, um, where he's approaching 50 million subscribers, and he's going to start, helping channels grow. And I think YouTube is finally starting to be recognized as like a serious business. Like people are making serious livings off of YouTube, and I know people are thinking like, how can you invest in channels? How can you invest in a
Hmm.
creator? So I think what you're thinking of is definitely a step in the right direction. I think there's so much that can be done beyond just AdSense and merchandise for YouTubers and like affiliates, but it's just we're yet to discover it. Like Emma Chamberlain started her own coffee line. Graham Stephan might do it too. Graham Stephan's doing Yada Bank as like an angel investment, talking about it on his channel. Mr. Beast actually just launched like 300 Beast Burger like fast food chain restaurants across America or something crazy like that. So I think it's like, what can we do in the finance niche that provides value to our users beyond just like our videos?
Hmm.
I think it's a big question that all of us should be thinking about. Yeah. Um,
That's pretty deep, man. I didn't think I didn't I didn't go that deep into thinking about that. But there's one thing that I admire from you guys. Like you guys have built a pretty big community, like outside of YouTube, like with your Discord communities. And I was like, yeah, that's something like I wish to do too. But
Well, I mean, I think Matthew has a little bit bigger of a Discord chat so far, and I think you have a little bit more experience. But so far, it kind of seems like in my Discord, at least, that a lot of people are talking to each other, or if a question is asked, then the community will just respond. People were just answering all the questions themselves, but I do still get asked specific questions.
Yeah, I would agree. I think there's a level of network effect,
Hmm.
where the value really comes from the people in the community as much as it does come from like the person hosting the community, which would be like me, Daniel, or you. And I try and add more value beyond that. Like I do secret videos just for like top tier patrons. I do the buy sell alerts and everything.
Hmm.
Um, but I think the biggest thing is emphasizing culture. the community is like grown to a point where people know each other now. Like there's like friendships being formed, and like very knowledgeable people are very generous with their information. So when they ask me something, I'm like, okay, this is an opportunity for me to kind of help someone learn, and then they can bring that to the community once they've learned it, if someone else has the same question. So it's like building a network almost.
Exactly.
But you should definitely do it. I think there's a big dividend community out there that would.
I mean,
that would
I
would
do
agree.
have a Discord, but it's pretty dead. It's really dead. Yeah.
yeah,
But
no,
definitely in 2021, I'll be trying to revive it.
okay, yeah, be on the
Yeah,
lookout.
It's also it's a good way for your audience to get easier access to you. And like, I just post my research in there. So if I'm researching a new stock, I'll just talk in real time, just my thoughts about what I'm researching, what I'm currently looking at. And I find that kind of helps them with their own research process as well.
Yeah,
So it's like, it's not too much additional work in that sense too.
definitely.
Okay.
All right, now let's get into the meat of the video, real estate, which is something I'm personally very, very interested in. That's like definitely the next step for me. And real estate has always been my end goal, like a portfolio of income properties. So if someone's just getting started, can you kind of walk us through your first deal, what you learned through that first deal, and maybe what you wish you knew before getting into that first deal?
So my first deal was basically how I look at buying property is I'm going to go buy the worst house in the best neighborhood.
Yeah.
All right.
Okay.
So because there's going to be like a upper tier to how much your property is going to be worth. And if all the averages of the houses around there is like 200, 300,000, all right, that's where it will be worth. So I'm looking for a property that's under that value. And when I'm talking about messed up houses, I'm like talking about like there's a hole in the roof, there's a hole in the floor. Yeah, so I have like right now I have like some pretty good contractors that can help me do all that stuff. But before, when I first started, I was doing a lot of the work myself, painting, like some of the easy stuff, like the electrical work, the plumbing work. That's something you have to definitely hire a professional for. Like I said earlier, I was a big saver. So definitely like that was one of my biggest advantages. I was able to save enough money to buy it in cash. And that just makes a lot of the deals go easier. But if you are not a good saver and it's your first time buying a home, they have something called the FHA loan or the FHA program, which is a first time home buyer program. So this like helps people that are just wanting to get in. And you can put even like close to 5% or less down on a property in that way.
Oh, wow. Okay. Yeah. I always thought the general rule of thumb was like 20% down.
20%, like it's good to put, the more you put down is better because you have to pay mortgage insurance if you
Right.
put less than 20%.
Mhm.
But if the
Okay.
numbers work, right now, like it's really good to get like a 5%, 5% down just because the interest rates are so low.
Yeah, I would agree.
Got it. And then what was something that like maybe you wish you knew before going through your first deal?
Going through my first deal, like there's this one thing I think a lot of us go through is called analysis paralysis.
Mhm.
Like before I made my first purchase, it was probably like from when I first started learning to when I first made my purchase was maybe 2 years.
Okay.
So I
Okay.
had like I was like reading books. I was listening to Bigger Pockets podcast.
Yeah.
That's probably one of the number one resources right now that I always recommend that to everybody. And so I learned all my stuff from there, and they kept telling me, take action, take action, take action. And it just took me 2 years to do it. So try not to make it seem like a bigger deal than it is. It's like buying a regular home for you to live in for yourself. It's just a rental property. Just try not to make it too big of a deal.
Mm-hmm. So would you say like with that in mind, do you wish you like started maybe a year instead of waiting 2
exactly.
years?
I should have started a lot earlier because now like the properties that I'm looking at, they're maybe 15% more expensive than last year, which is crazy. What I could buy like if I knew, in hindsight, I should have bought a lot more before this year, but that's in hindsight.
Got
Yeah.
it. So, and then on kind of to that point, is it more of like a you don't know what you don't know situation where you can read and try and learn as much as you can, but you're going to run into like different situations no matter
Yeah,
how much preparation you do?
definitely. That's a perfect way to say it, because even every step of the way, you can learn how to do it. That's the one best thing about investing in real estate.
Mhm.
It's like, yeah, you can try to finance the property. That's one problem. Once you get that done, there's always going to be another problem. There's always going to be another problem, but it's really step by step when it comes to real estate. It's not something that you can just prepare everything for and you'll just figure it out all at one time. It's like even now I have to deal with a lot of stuff that I've never dealt with before, even though like I've been doing it for a few years now.
That sounds a lot like running a business too. You can read all the books, but there's a lot of things that just come up along the way that you kind of have to adapt to and figure out.
So I guess moving forward, stocks or real estate, like which one do you think is better, and which one do you think you'll put more of your money towards in the future?
So I started to invest in the stock market just to diversify away from my real estate portfolio, because my real estate portfolio is still a lot bigger than my stock portfolio at this point. So definitely in the short term, I'll still be investing in the stock market, and like my budget or my investing strategy right now for the stock market is like invest about 4,000 a month. Like that's how much I'm putting into the markets. I try not to do like a lump sum.
Mhm.
It's just I just don't want to part ways with with cash that fast.
Got it. And then what? So you talk about, well, a lot of times when people think of real estate, they kind of think like, oh, it's like you're just getting the percent return from like the rental income. But there's also like appreciation. You're also like building equity in the house if it's not already paid off, which yours are. So can you speak a little bit to like comparing real estate returns to stock market returns?
So one good thing about real estate for me is I I get to take advantage of all the tax advantages from it. So I'm able to like deduct a lot of expenses because of the real estate. So that's really helped me in my business. And just to lower, I just went to talk with my accountant this morning, and my bill was a lot less than I expected just because of, of the real estate.
Got it.
And
So,
the appreciation is good as well, because when I bought my last property last year in 2019, I think I put in like 250,000 for that property. And like you can see my whole journey from buying the property to fixing it all up. I put that all on YouTube. And right now I think it's worth a lot more, like maybe 350, around that much right now.
Wow.
So
nice.
yeah, so that's on the lower end. That's like a conservative end, because the properties in my area right now, like for the same place, is probably worth around 400. Not
Oh,
fixed, not fixed,
that's awesome.
not
Wow.
fixed up. So that's
Congrats.
why like I haven't been in 2020. I want to buy another one. Like my strategy was just to buy one property a year and just like grow that way. But after all this happened, like it really threw a wrench in the plans.
Are you willing to
Yeah.
share what market you're in, just so for some more context?
So
Like,
I'm outside of Boston, like just like 30 minutes outside of Boston.
okay,
Okay.
nice. So I think one of your videos you talked a little bit about the snowball effect, and that definitely plays into this whole like dividend investing kind of style. What would you say is like the critical mass or like escape velocity or whatever you want to call it, to the point where you're like, okay, this is really starting to add up. Like I really feel like it's things are starting to get to the point where this can be like a real source of passive income for me. Like beyond that, like $60 a month, like $50 a month, like the point where you're like, okay, this is something I'm gonna really get into.
So I feel like it took me so long to go from like 0 to 100,000, but then once I hit 100,000, my portfolio now, like today, it's like over 150,000.
Mhm.
So I think just making your first 100,000, I think once you do that, has to be one of the hardest parts ever.
Mhm. Dan, do you have any other questions related to like investing or anything before we ask that one last question?
No, I think we've covered pretty much everything I wanted to go over on my end.
Awesome. All right, the last question is, we heard in a video that you were thinking about getting a Tesla or a Cybertruck as your next car. So has there been any progress on that front? Are you thinking about getting a Cybertruck?
So earlier today, I just went with my brother to go pick up his Tesla Model Y.
Okay, nice.
Yeah. So, and me and him are really close, so I can just borrow that car anytime I want. So, but I already put in my pre-order. I think it was last year for the Cybertruck. So whenever it comes out, I'm definitely getting it.
Nice.
Yeah.
Nice. That's gonna be awesome. You gotta make a video about that. It'll probably pay for itself.
Yeah.
Probably.
Just gonna spam the Cybertruck every day.
Yeah. All right. Is there any like last piece of advice that you want to give to anyone watching or listening?
Last piece of advice, just start investing. Just start, even if it's a little bit of a amount. Like when I first started investing, it was just putting in like $100 a week. So just because once you get the ball rolling, it really does. The snowball effect that we talked about earlier, it does take into effect.
Mm-hmm. Think about your money in Subway sandwiches.
Yeah.
Yes.
All right. Thanks so much, Bruce. It was awesome having you on. Really great getting to know your background, your history, and everything. And I really appreciate you sharing the knowledge. And looking forward to talking with you more and maybe having you back on the show at some point.
Awesome. Nice to meet you guys.
Yeah, nice
Sweet.
to meet you too. Thank you for being our first guest on the podcast.
Yeah,
this has been awesome.
Yeah.
This has been awesome.